A single bottle of whiskey just sold for $125,000. But this isn't even the craziest thing happening in the investment world right now. What if I told you bottles of alcohol are crushing the stock market, and most investors have no idea this is even happening? And by the end of this video, you'll see why whiskey isn't just beating stocks. It's being engineered to win by government policy. Right now, while everyone's arguing about crypto and stocks, there's a completely different game being played. Smart money is pouring into things you can actually touch, taste, and hold. We're talking about whiskey that's returning 21% per year, and the government just made a decision that's about to make this opportunity even bigger. Most people think investing means buying stocks, bonds, and maybe some crypto if they're feeling adventurous. The 60-40 portfolio, 60% stocks, 40% bonds, used to be the golden rule. But there's a massive problem with this approach that almost nobody talks about. When inflation hits, your bonds get crushed. When the market crashes, your stocks tank. And when both happen at the same time, you're stuck watching your retirement fund disappear. Meanwhile, there are people making serious money from assets that have nothing to do with Wall Street. Let me tell you about Julian Van Winkle III. He doesn't manage hedge funds or run investment banks. Julian makes whiskey. But in March of this year, something happened that sent shockwaves through the investment world. A single bottle of his old Rip Van Winkle from 2007 sold at auction for $125,000. This wasn't a fluke. The bottle was estimated at $30,000 to $50,000, but bidders pushed it to $125,000. That's 2.5 times the high estimate. Now you might be thinking this is just rich people being ridiculous, but that's exactly what everyone said about art in the 60s and wine in the 80s. Every single time, the smart money got in early while everyone else called it a bubble. The numbers don't lie. According to the Knight Frank Luxury Investment Index, rare whiskey has grown 586% over the past decade. That's not 5.8, that's 586%. Compare that to the stock market's 12.9% per year over the same period. If you want to see other ways that people are getting started in this market, hit subscribe and I'll show you step by step. But whiskey is just one piece of this puzzle. The global alternative investment market has exploded from $7 trillion in 2014 to over $18 trillion today. Contemporary art is delivering 16.2% annual returns. Sports memorabilia is growing at 6.8% annually in a market projected to hit $40 billion by 2030. Stick around because I'm about to show you how tariffs handed some investors overnight profits. Here's what's really wild. These assets don't move with the stock market. When stocks crash, people still want their vintage bottles. This is what investors call low correlation, and it's the holy grail of portfolio construction. But here's the game changer most people missed. On August 1st, the US government slapped a 15% tariff on European wines and spirits. This affects about $10 billion worth of alcohol imported to America every year. Think about what this means. Every bottle of Scotch whiskey, French champagne, and Irish whiskey now costs 15% more than it did a few months ago. Suddenly, American whiskey brands like Van Winkle have a massive competitive advantage. And here's the part investment experts are really excited about. If you owned bottles imported before the tariff, you're now sitting on inventory instantly worth more. The tariffs essentially created a guaranteed 15% return overnight for people who saw this coming. This is creating incredible demand for American whiskey, as collectors who used to focus on Scotch are now looking at bourbon. That record-breaking Van Winkle sale wasn't with just about one bottle. It was a signal that American whiskey has officially arrived as a serious investment class. The bottle that sold was special for several reasons. It was reportedly the only one of its kind, ultimate scarcity. It was hand-selected by Julian Van Winkle himself, so the provenance was perfect. And it contained liquid from the old Stitzel-Weller distillery, which closed decades ago and has legendary status among collectors. Here's something most people don't realize. These markets aren't random or chaotic. They have strategies, analytics, and professionals just like any other asset class. Take whiskey cask investing. Instead of buying bottles, some investors buy entire barrels while the whiskey is still aging. As it matures, it becomes more valuable. Typical returns range from 8 to 15% annually, but some casks have delivered close to 20%. And it's not just whiskey. The same professionalization is happening everywhere. Masterworks makes fine art affordable. Vinavest stores your wine like a billionaire. Rally turns collectibles into stock shares. These companies are opening doors that used to be reserved for millionaires. And in just a moment, I'll show you why this new infrastructure might be the biggest opportunity that regular investors are overlooking. So what does all this mean for you? The investment landscape is changing faster than most people realize. While traditional assets struggle with inflation and volatility, alternative investments are providing returns and diversification the old playbook can't match. The whiskey market delivering 21% annual returns over a decade isn't a fluke. The recent tariff changes are creating immediate opportunities for those paying attention. American whiskey brands are gaining advantages, and smart investors are positioning themselves now. The entire alternative investment market is expanding from 18 trillion toward 29 trillion by 2029. Infrastructure is developing fast with storage, authentication services, and trading platforms making these markets accessible to everyday people. The key is education and timing. Most people will figure this out eventually, but by then the best opportunities will be gone. The investors who learn how these markets work and start participating now are the ones who benefit most. Remember that Van Winkle bottle that sold for $125,000? That bottle existed for years before someone recognized its investment potential. The same dynamic is happening right now across hundreds of categories. That $125,000 bottle didn't just break records, it broke the rules of investing. And those rules are being rewritten as we speak. Hit subscribe and check out my other videos where I offer more ways that regular people are making huge profits without spending a lot of money. Which alternative asset would you bet on first? Whiskey, art, or sneakers? Drop it below and I might cover it next.